Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an amazing weekend. In today's video, we are going to be discussing the short-term and macro price action, moving into what will be a major weekly candle close of massive significance as we are retesting the weekly range high, the highest closing price reached for Bitcoin of 2024, that being $104,480. A break and close above this region will very likely facilitate a new all-time high in the weeks to come, whereas an inability to sustain a weekly close above this level may result in a steeper short-term pullback. We are going to be discussing all of the implications of all potential short-term and macro moves in today's video. By the end of the analysis, you'll have a detailed and comprehensive understanding of where Bitcoin will likely be moving to, the probabilities for these potential directions, and even the total altcoin and total cryptocurrency market cap. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats, from the general chat to the trading chart and education chat to the help, the daily video, and the news chat. If you are interested in joining, click the pinned comment on the free channel, contact our admin by clicking this name, or check out the links to our trading track record or a 10-minute video showing you inside the channel. Let's jump into the video. So taking a look at the short-term price action, Bitcoin hasn't been doing all that much over the past 48 hours. In fact, over the past week, Bitcoin has really been struggling to push past this $104,000 region. If we go over to the weekly chart, you can see right over here, the weekly candle itself, opening price is just about $800 above the current sitting market price for Bitcoin. So we've seen a lot of indecision, a lot of stagnation, a lot of decreasing volatility through this weekly candle. And this short-term chart over here represents that. As we can see, the price is slowly but surely creating higher lows on the short term very slightly, and lower highs on the short term again very slightly, indicating not only we are seeing indecision, but we are seeing decreasing volatility as the price is moving along. This general compression in price action very often results in more explosive and reactive moves in the direction of which the price is able to break. And we're going to be discussing the potential for that upward move, what that would look like, and what the targets would be, as well as the downward move in the video today. Let's move over to the market data first. 24-hour volume and liquidations. Of course, volume is sitting at around 213 billion. Not incredibly high, not incredibly low for the weekend, down 12%. Liquidations up 36% over here at 267 million. The majority of those coming from Ethereum and altcoins, with only around 10% coming from Bitcoin. So again, very little volatility here on Bitcoin. The majority of the volatility come from Ethereum and altcoins at the moment. Moving over to the DXY. The DXY again has closed out for the week. We saw a very volatile week for the DXY, breaking above that daily 50 EMA. Of course, we had PPI data, we had CPI data, and we've just seen some more news about the credit rating in America dropping from a AAA down to a AA1. So we've seen, again, a little bit of volatility here on the DXY, and the overall direction of the DXY currently is still going to be trending slightly upwards to this 200 moving average. Of course, we can see momentum is more or less bottomed out over here. We've had that green dot print. We have had the RSI break that downtrend, turning back upwards, and we have seen the price deviate back above the change of character. So this is going to be marked as deviation. We are expecting moves to the 200 moving average, but if we do drop back below 100, we would then expect macro corrections into that 93 region. Looking at the S&P 500, the S&P 500 has shown significant strength moving into the end of the week, pushing back above that prior change of character level. So again, we are watching to see how we react above this level now. If we are able to sustain this as support, we are expecting continuations into these prior highs around 6,100 to 6,200, and then of course into brand new all-time highs. If we do open up red and engulf this current green candle, that is going to be the reversal signal. So we're watching for reversal signals toward the downside. We are watching for a red candle to engulf the opening price at around 5,930. If we see a red candle do that, that is going to be the initiation of the downtrend. We would have invalidations above this prior green candle, and we'd be expecting lower, and if we break back above, then we'd expect higher. That is how we're going to be playing that at the moment. Of course, we need to wait to see how that market opens. That is it for the broader updates, guys. Let's go ahead and get into the Bitcoin analysis. Now, before we do, if you were interested in supporting the content, supporting me making it, and of course, supporting yourself, sign up to BitGet, BitUnix, or BingX with the exchange links down below. You get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. Again, you'll support the channel, you'll trade on exchanges I use and I trust, and you'll get those exclusive bonuses for yourself. Check out the links. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay team, let's go ahead and get back into it now. To address one question really quickly, we've got a lot of questions lately about an Ethereum update, an Ethereum video, so I will do want to say on this right now. We are going to be doing an Ethereum analysis at some point over the next couple days. Of course, all of our Ethereum analysis videos are posted on our second channel. If you're not already following that, you can do so. The link should be down in the description, or of course, you can just go ahead and type in this channel and you can follow us over here. We post our Ethereum videos. So if you're interested in an Ethereum analysis, we'll be doing that on this channel, but let's get into the content today. So starting on the total cryptocurrency market cap and total altcoin market cap, moving over to the macro charts, and then finishing up on the short-term price action. Let's take a look at what is happening. So over the last few days, we were discussing, particularly around about on the 13th and 14th of May, that we were seeing some early signs of exhaustion for the total cryptocurrency market cap. Primarily, we were seeing weakening positive momentum, the weakening positive momentum marked out by both our indicator over here of our red arrow print and the red dot print here on the market cipher B, indicating a degree of exhaustion was developing. More or less, the buyers were losing that momentum that they have had through this uptrend. Now, with that exhaustion developing, the probabilities for a negative momentum shift started to build up. And what we saw a day and a half later, we saw the RSI break down that uptrend. This is the overall momentum, the trajectory of the momentum since our lows at around 2.4 trillion. We can see we broke down. So the momentum at the moment is negative. We have negative momentum as we have broken through this trend line. Now, with that, the probabilities for corrections do increase, but we need to contextualize what is happening. We are currently sitting in a major level of support. Looking back at historical price action, we had a major horizontal range between the dates of around the 6th to the 28th of Feb. This was, of course, a few months ago. We can see the range high spanned from a price action of around 3.19 trillion to 3.25 trillion. This was a major area of resistance, and we can see it is now acting as a major area of support. Yet again, prior resistance turns to future support. So while we sustain above this level, or on this level, the potential for reversals in the market back upwards remain intact. And this short-term downtrend we have developed, which has resulted in short-term momentum turning negative, could be absorbed and the price could continue upwards, resulting in Bitcoin going upwards, resulting in, of course, the S&P 500 more likely, of course, also going upwards, not as a consequence of Bitcoin going upwards, but more or less, we'll say, are both negatively correlated on the broader scale to the dollar, okay? And of course, they are both essentially, if we look at our DXY chart here really quickly and zoom out, and we look at the correlation coefficient between the S&P 500 or traditional asset markets to Bitcoin, we can see they do share a correlation of around 0.7. So for the most part, they do generally move in the same high time frame direction. How they move on the intraday and the daily is sometimes often different. They move by different amounts. They move differently, but on a higher time frame, they move in the general same direction. So if we're looking again back at Bitcoin over here, if we want to see Bitcoin move to a new all-time high, if we want to see the markets continue upwards for altcoins, we do need to see the total cryptocurrency market cap actually reverse at this level of significance. So that does mean the opposite if we don't, right? If we don't see that happen, if we don't see this reversal take place at 3.19 to 3.25, we do run the risk of steeper corrections into our next level of support. Next level of support is going to the range low. Again, prior historical support over here is also future support. This is 3 trillion to 3.07 to 3.08 trillion, which will result in a correction for the altcoin market to continue, okay? And will result in Bitcoin failing to break through the weekly high and potentially running the risk of chopping within this weekly range again. Something to keep your eyes on. Of course, it is very tricky to tell you exactly what is going to happen. We need to wait to see how it develops. But if we're looking at the momentum as a leading indicator, we do have a pretty good chance at moving downwards over here. There's a very real possibility that will happen. Now, if we're going to go ahead and draw probabilities, draw potentials, we need to understand what makes this chart up. What is the makeup of this chart? Well, the majority of this chart is Bitcoin. Of course, Bitcoin is the majority of the market. When we look at Bitcoin dominance, it takes up the market share. So how Bitcoin is going to respond on the short term and what next short-term move we see for Bitcoin, whether it be a downward move or upward move, is going to massively impact the total cryptocurrency market cap's direction, which we can then use as confluence to then identify points at which the market will likely rebound from, or at least stop selling off. So we can use them in conjunction with another and cross-check with one another as confluence to, I guess, formulate an overall plan of action. So when we're taking a look now at the altcoin market, the altcoin market is as well retesting a pretty significant level. So as the total cryptocurrency market cap, and we'll keep this chart up on the left over here, is retesting a very important support, we can see the total altcoin market cap is also doing so. We are retesting the baseline of the Ichimoku cloud. And the baseline on the daily is this orange line. Of course, it is going to be a different color to you. I've just made it orange for the sake of visual needs, so you can see it more clearly. If we were to make it, normal, base default colors, it will be red, and then you may confuse with the 50 EMA. So if you look at that and you'll see it's orange and you wonder why your baseline is not orange, it's because I've gone into the settings, I've changed the color of it for the sake of the video, but of course it is still the baseline no matter what color it is, okay? So the baseline of the Ichimoku cloud is a level of support we retested back on the 6th of May. Now that is significant because this was again our higher low before we saw this rally, this next leg up to these major levels of resistance, okay? It is the low point before we broke through our prior higher low at around 840 billion. When we broke through 840 billion, we had the trigger for a move to 940 billion, okay? So it is a very important level, this baseline, because it represented the lowest point where we retested before we continued upwards, and we are retesting it again. So it's a trajectory, is an indication of the strength of a trend, if we wanted to simplify it into a sentence. An indication of the strength of a trend. And therefore, if we break back below this region, it does become slightly more probable we see corrections back to 840 billion, okay? So if we're taking a look at the altcoin market does have a chance to bottom out on the short term here, but we need to sustain above the baseline, the Ichimoku cloud. Again, if we see the total market cap drop, we will see the altcoin market cap drop as well, and Bitcoin, the entire market, will drop. For the altcoin market to enter the next leg toward the upside, so to be confident that we will see aggressive rallies upward for altcoins like we saw over here, 30% rallies on average, 15 to 30%, we need to break through 940. So we break through 940 billion, that is going to be the next quote-unquote free money period for altcoins, essentially, where altcoins will, on average, do very, very well. Let's move over to Bitcoin, guys, now and talk about the chart. So, as you know, in just 24 hours now, we have got the weekly candle close. Now, I've talked about the importance of this weekly candle close, but let's explain what this means, in terms of context. So the closing price of a candle doesn't necessarily always indicate that the market is going to continue in the direction, but what it does in terms of the context of our ranges, okay, our ranges are not structures, they're not structural levels, they're ranges. It tells us the probability of which the price action will sustain above these ranges. So of course, if we look at this range over here, we've got our 104.4 range. Anything above this region, we expect increased volatility, okay? That is what this range is telling us. Therefore, if we're able to close above this region, this would be an outlier in the data set that we have got prior, which would increase the probability of which we would likely sustain above. Okay, so it's all about probabilities. Think about a weekly candle close equals more time spent above a level of support, which level of resistance, which facilitates more liquidity to build up below and turn that level into an area of support on the order books, which increases the depth and allows the market to potentially move upwards with less volatility toward the downside. So it's about increasing the probabilities, not confirming moves. And I think that's a very good distinction. You're not confirming moves on timeframes, you're using timeframes as context to increase the potential probability that the moves will sustain when they have broken out. So if we're looking at potential all-time highs for Bitcoin, of course, from a logical perspective, and this is an obvious statement, we need to break above this region, right? Because we can't go to all-time high if we're below this region. So from a logical statement, we need to break above the region. From a technical statement, for us to break above that region and the impact that will have on the chart, it would massively skew the probabilities in a directional continuation into those all-time highs, greater than a loss back below that region. So if we're able to close above here, the probabilities that we sustain above are greater than the probabilities that we drop back below. Now, if we're looking at the weekly chart, we do have some indicators such as the 62.09 on the weekly RSI, which has had a positive momentum shift. Again, prior positive momentum shifts have resulted in directional continuations upwards, taking the positive momentum shift over here on the 62.09, taking the positive momentum shift over here on the 62.09, resulted in strong continuations, Now, if you look at where those 62.09 crossovers happen, they actually happen more or less at key horizontal levels. So I'm going to go ahead and just delete everything really quickly and draw this level in on the RSI just to make it more simple. 62.09, we'll draw it in, and then we'll look at the point of which we broke through. So we're drawing a vertical line on the candle of which we closed up. So not the candle of which we broke, we're based on closes. So we're drawing on that closing candle over here, and again on that closing candle over here. You can see at those points, we broke through these major horizontal levels. We can see right over here, horizontal levels. And if we look at the price action right now, we have got that horizontal level or the horizontal range. Sorry, these need to come down to the ranges. We can see the range lows or the range highs. What we saw in prior instances on the close above, we had already broken through these highs, okay? And with that close above, we saw direct continuations upwards, which were relatively aggressive for an extended period of time. In this instance, we have had the close above, but we have not broken through the high. Now, that isn't necessarily going to signify that we are not going to continue upwards, but it may be an early sign that this might not result in a stronger rally than anticipated. That is something to be considerate of. Nevertheless, if we are able to get the weekly close above this level, we would likely see a reaction to what we have seen in the past based on the weekly momentum shift. On average, if we look at the average percentage gain from momentum shifts above 62.09, the average is very skewed because we have some data points going back as far as 2014 when there's a lot more volatility, but we have seen on minimum around a 10% gain. So expected gain of around 10%. if we break through, which takes us into around 115,000 US dollars. Okay, that is going to be the target. Let's move over to short term. Short term price action is where everything will either come together and facilitate this rally or fall apart and result in a correction for the rest of the market. This is by far and large, yet again, the most important chart. Now, we've talked about this in the past in regards to significant charts. We said this was the most important level, and it was the most important level as it resulted in a strong move. We said this was the most important range, and it was the most important range, and it resulted in a strong move. The pattern we have been seeing is a week period or a few days period of immense volatility, followed by compression and consolidation, followed by immense volatility. That is the kind of pattern we are seeing again. The question is, are we going to see the volatility develop upwards, or are we going to see the volatility develop downwards to fill that VRPV gap? Again, the VRPV gap, the gap between two peaks on the visible range volume profile, indicating a range of price action on the horizontal scale where the volume required to move between horizontal price points is significantly lower than within these peaks, which means the price action would gain negative momentum or negative volatility if we were to break down, and gain positive momentum and volatility if we were to break up, resulting in large reactionary moves in those directions. And that brings me back to what I said at the start. Consolidations result in large reactionary moves. So when we're looking at this horizontal consolidation, we can use indicators such as a momentum indicator, such as moving averages, to potentially guess to where the price would likely trigger these moves. Unfortunately, a lot of that has been invalidated over the past 24 hours due to just the sheer amount of indecision. But if we're looking at the horizontal ranges, this is still going to be the best way to determine whether or not we've broken through these ranges or not. We are looking at these low points and these equal high points. If we break through these lows, we then expect strong corrections down. If we break through the highs, we expect strong continuations upwards, and that continuation upwards will be the 115,000 target. If we break down, that will be around a $98,000 to $97,000 target, okay? And the consequences of each of these moves would again impact the total cryptocurrency market cap and the altcoin market cap in the way of which we discussed early in the video, which will then increase or decrease the potential for macro continuations upwards, at least on the short term. So this is the most important chart you need to be paying attention to. And again, the directional break of this chart, which we do believe to happen this week. We believe the directional breakout will happen before the end of next Sunday. So within the next 7 days from now, we do expect this range to be completed, meaning we will have either broken out and continued upwards or downwards, or broken out and failed to continue upwards or downward, meaning we had deviation down, okay, and then a continuation upwards, or deviation up and then a continue downwards, or we will have some reaction which will sustain. But we are going to see this range either invalidate or break very likely within the next 7 days. The reason I say that with confidence is because when we look at the volatility, this 50 EMA is pushing really, really close upwards to the price action. Again, the distance between the price and the 50 moving average signifies volatility. And you can see the distance is decreasing, and is likely decreasing yet again. So it is likely we'll see a strong move upwards and break, or a strong move downwards and break. But the probabilities right now, while we're in horizontal consolidations, are more or less 50-50. So it is more about planning ahead for those moves. Thank you for tuning in. Have a fantastic rest of your day, guys. Make sure to check out the Telegram channel below. Of course, you can join up. We post everything you need to know about Bitcoin and charts. And if you are interested in supporting the content even further, you can also check out those exchanges to sign up and trade there. It helps me support the channel, and helps you in your trading journey. Check it out. See you guys in the next one. Bye.